If anyone's buying crypto, they have to use a long-term time horizon. So they shouldn't worry about the price 1 month from now, but they should think about where it is 5 years from now. And that's how we've always approached it. When we wrote about Bitcoin, we always wrote about prices 5 years from now. And that's why even today, I think Bitcoin can still get to $1 million. They have to understand there is a huge transformation taking place on Wall Street, because AI and blockchain are really going to disrupt traditional Wall Street. And so they should really bet on a future where that innovation is going to take place. And part of it is Bitcoin, because that's where you store value. But a bigger change is on smart contract platforms like Ethereum. So to me, I think Ethereum is in a super cycle. Like, it's just the start of what I think is going to be a really explosive rise over the next 5 to 10 years.
Tom Lee, co-founder of Fundstrat, predicts Bitcoin could hit $1 million much faster than anyone expects, while Ethereum is entering what he calls a supercycle that may dominate the next decade. Bitcoin's recent surge past $115,000 is only a stepping stone, not the finish line. Lee describes this moment as both thrilling and intimidating, signaling the start of a much larger ride. He warns that over the next 5 years, opportunity and risk will blend together as Wall Street faces a financial earthquake. Many investors remain distracted by short-term noise, but Lee believes Bitcoin could be the spark that ignites a powerful, unstoppable shift in global markets. At the same time, Ethereum is poised for historic growth through its supercycle. Lee cautions that those unprepared risk missing out on massive upside while being caught off guard by the same market forces driving this change. He points to key catalysts that could send Bitcoin toward $1 million and Ethereum into unprecedented territory.
The stablecoin industry is the first really widely adopted crypto product. That's why we called it the Chat GPT moment. And stablecoins work really well. Merchants love it because they don't have what they call chargebacks, and the exchange fees are much lower. If a merchant accepts Visa payments, for instance, that's 2 to 3% of the charge is taken by Visa. And if there's a fraudulent charge, the merchant is forced to lose money on that transaction. There's never any fraud on a stablecoin because it's a bearer instrument. Consumers like stablecoins because it's less expensive to carry a USDC than to have a bank account. And then the stablecoin issuer makes money on a stablecoin. Stablecoins also are big owners of U.S. Treasuries. In fact, collectively, they're the 12th largest holder of U.S. Treasuries. So it's a very good model for the United States. And I think banks have looked at stablecoins initially as, they didn't really like the product, but now that they've seen the adoption, they've become interested in issuing their own stablecoins.
Stablecoin users like Circle, Tether, and PayPal, and the traditional financial sector, how will they compete?
Oh, well, they're definitely going to compete. Stablecoins, I think, have the primary distinction today is really U.S. compliant stablecoins like USDC and PayPal versus Tether, because Tether is much bigger.
Still paying taxes on your crypto gains? What if you didn't have to? With ITrust Capital, you can buy and sell crypto inside a tax-advantaged IRA, giving you a smarter way to grow your portfolio without worrying about capital gains tax. That's why they're the #1 crypto IRA platform in America, with billions in tax-advantaged transactions. There are multiple ways to fund your account. You can make a contribution, transfer an existing IRA, or roll over an old 401k or employer plan. You'll get access to a wide range of digital assets, low fees, and 24/7 trading, all backed by secure, one-to-one asset ownership with institutional-grade custody. And if you have questions, ITrust Capital offers 100% US-based customer support with real people ready to help. Click the link, use code DOSE7, and get your $100 funding bonus today. Start building your crypto wealth, tax-advantaged, with ITrust Capital.
But it doesn't operate in a compliant way with U.S. OFAC, U.S. regulatory requirements. Because in the U.S., in order to have a stablecoin wallet to receive it, you have to have done what they call KYC, know your customer. It's a standard anti-money laundering process. So what all bank account, anybody who opens a bank account in the US has to do a KYC.
Okay.
But Tether doesn't require KYC. That's why it operates so widely outside the US. 80% of all stablecoin transactions do take place outside the US at the moment. So it's much bigger outside of America. But, today there's, in crypto, you can just use cross-chain. You can swap Tether for USDC into a compliant wallet. So there's interoperability. So JP Morgan, Goldman, Amazon, Walmart, they'd love to be in the stablecoin business, because then they can capture the benefits of issuing a stablecoin.
So like big banks have centuries of trust and millions of customers, and the crypto firms have like the technology. Who do you think has the upper hand? Do they have to compete, or will they survive like both?
I think both. I think the strongest ones are going to survive. JP Morgan and Goldman, I think, are going to be huge winners from blockchain, because they, as you said, they have enormous positive reputations with governments, with institutions. They have a brand that's recognized. And crypto is a way for them to re-engineer their businesses to save a lot of money. So I think that the biggest U.S. banks are going to become global winners in crypto. The stablecoin market's going to get competitive. So Circle is the biggest stablecoin after Tether. I don't really know the financials of Circle that closely. So if someone is interested in owning that stock, I don't know. But stablecoins have to run on a blockchain. Right? So Tether, USDT and USDC, they operate on top of an existing blockchain. And the majority of stablecoins, over 60%, are operated on Ethereum. So Ethereum is where most of the stablecoins are actually operating, and 36% of the fees for Ethereum today come from stablecoins. And
that's a lot.
There's a stat that was just published over the weekend, but in just the last 7 days, about 7 billion of stablecoins were created on Ethereum, which is greater than the amount of stablecoins on Solana over the past 5 years. So more stablecoins creations are taking place on Ethereum. So I'd say if you're betting on stablecoins, you should bet on Ethereum.
Yeah, it's like betting on Ethereum. Okay.
Yeah, and that's just tokenizing the dollar. Wall Street wants to tokenize the stock market, and they want to tokenize bonds and real estate and even art. That tokenizing mechanism is the same essentially as tokenizing a dollar. So that's where Wall Street is, again, doing most of that work on Ethereum. My friends thought Bitcoin was... So my friends that are in the financial business, they are the ones who missed Bitcoin, because in 2017, their knowledge of the world is traditional stocks, traditional bonds. They didn't think crypto made any sense at all. So they were very skeptical of Bitcoin. And in fact, many ridiculed my views about it. Of course, now they acknowledge it was a great idea.
I think they'll regret it.
But now when I tell my friends about Ethereum, my close friends still do the same thing. They're like, Ethereum, it hasn't done anything for 5 years. Why would I buy Ethereum now? So my closest friends are still very skeptical.
Bitcoin's $2.3 trillion market cap keeps it in the spotlight, but stablecoins like USDT and USDC quietly drive billions into crypto, fueling volatility and instant liquidity. Most of this activity runs on Ethereum, which earns massive fees and is primed for a supercycle as more coins are staked. Bitcoin acts as a hedge against inflation, while Ethereum powers stablecoins, contracts, and tokenized asset. Together, they anchor the shift of global finance onto blockchain rails, feeding each other's growth.
And if anyone's buying crypto, they have to use a long-term time horizon. So they shouldn't worry about the price 1 month from now, but they should think about where it is 5 years from now. And That's how we've always approached it. When we wrote about Bitcoin, we always wrote about prices 5 years from now. And that's why even today, I think Bitcoin can still get to 1 million.
Wow.
And it's about 100,000 now. So that would be my first advice. The second is that they have to understand there is a huge transformation taking place on Wall Street, because AI and blockchain are really going to disrupt traditional Wall Street. And so they should really bet on a future where that innovation is going to take place. And part of it is Bitcoin, because that's where you store value. But a bigger change is on smart contract platforms like Ethereum. So to me, I think Ethereum is in a super cycle. Like, it's just the start of what I think is going to be a really explosive rise over the next 5 to 10 years. Well, if someone's buying MicroStrategy, they're buying it for their Bitcoin exposure.
Yeah.
And let's say that Bitcoin can go from 100,000 to 1 million, so 10 times. MicroStrategy will go up more than that because of its Bitcoin strategy. But Ethereum today is 4,000 roughly. We show that if Ethereum's price ratio recovers to its all-time high against Bitcoin, then Ethereum will outperform Bitcoin by 5 times. Okay, meaning if Bitcoin goes to 1 million, and that's 10 times from here, that means Ethereum could go up 50 times. Wow. So now Bitmine stock should outperform Ethereum's price move. So if MicroStrategy will outperform a 10 times rise in Bitcoin, Bitmine will outperform a 50 times rise in Ethereum. So in a way, and these are the 2 largest crypto treasuries in the world.
Yeah, it is.
The choice is really understanding that Ethereum is facing a positive innovation cycle that markets haven't yet recognized, because it's been for 5 years. It's been a chain that's been slowly improving, but now this is the moment.
What's your general outlook for other different sectors?
Well, I'm still bullish on U.S. stocks in the final few months of 2025, because there's 2 things that are positive catalysts. The first is that the Fed is going to resume its cutting cycle. And we looked back. So if you look at the entire history of monetary policy, the Fed has never resumed a cutting cycle in the fall. So it's only happened 2 other times in history.
And you're expecting this year as well?
Yes. Yeah. It's the Fed has signaled. So this would be the 3rd time. The first time was 1998.
Yeah.
The second time was 2024. And this is the 3rd time. In all the 2 prior cases, the stock market boomed in the 4th quarter because the Fed has been on pause, and then they're finally cutting. The second is that the business confidence, the ISM manufacturing, actually has been below 50 now for 29 months. It will probably recover back to 50 once the Fed starts cutting. That's the longest stretch of the ISM below 50 in history. So that's really good for industrials and financials and small caps. So I think that this fall is a really broadening of the stock market rally, where the banks and the industrials and the small caps are going to do as well as large cap tech. When the Fed resumes its cutting cycle, they have a lot of room to cut rates further, because the Fed funds is at 4.5% right now, and inflation is probably closer to 2 or 2.5%. So it's the real interest rate is extremely tight. So I think there's a lot of room to cut. That will take a few years. I think this is really bullish for stocks. I think the most important message I would leave you is that when you think about whether it's stocks or crypto, you should understand that in the stock market, you really want to buy the best companies. That's why Tesla, Nvidia, Palantir, these are the strongest businesses, and they have trends that are not sensitive to the economy. Like if there's a recession, Tesla, Nvidia, Palantir, they're the strongest businesses. They're not the ones that are going to be hurt. Everything else is going to do worse. And the same is true in crypto, that in crypto, you really want to buy the strongest chains. And that's Bitcoin and Ethereum, maybe Solana, but these all have really good, I'd say, core underlying factors that support them.
MicroStrategy has become one of the biggest Bitcoin plays in the stock market, with its massive holdings amplifying every move in BTC's price. If Bitcoin makes a huge rally, MicroStrategy's stock could soar, but Ethereum might offer even greater upside. If ETH regains its historical strength against Bitcoin, it could grow multiple times faster, giving companies with large ETH positions even bigger gains. Beyond crypto, optimism extends to U.S. equities as the Federal Reserve prepares for potential rate cuts heading into 2025, a move that could spark rallies across industrials, financials, and small-cap stock. Tom Lee's advice is clear: focus on strong, resilient companies like Tesla, Nvidia, and Palantir in traditional markets, while keeping exposure to the leading crypto blockchains, including Bitcoin, Ethereum, and Solana. With macro conditions and crypto adoption aligning, the coming years could present one of the best wealth-building opportunities in both stocks and digital asset. Do you think Ethereum could really outperform Bitcoin in the next cycle? Which crypto or stock do you see leading the next big rally? Let me know in the comment. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.